And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. It started. Carol Massler and Tim Stenovic join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and our partnership with YouTube as we continue to track the market movements on the tensions in the Middle East.
What tensions? Look at the equity trade. It's like meh. I'm kind of shocked by it. I know the Treasury trade's a little bit of a different story, but kind of fascinating to actually see some slight gains, as little as they may be, on both the S&P and the NASDAQ, considering we have, a war in the Middle East.
Okay, well, I got something for you. How about WTI up 7%, Brent up 8%. We've got gold up 1% to $5,300 an ounce. So there's some movement in other parts of the market.
Absolutely. I mean, take a look at the Treasury market. 10-year Treasury yields higher by about 10 basis points. We were just having the conversation with Ed Yardeni, though. While that is a very sizable move when it comes to the benchmark Treasury rate here, I mean, we're more or less in the range that we've been in for several months here. So it's hard to get too excited.
Yeah, some of the moves here aren't extreme. You are seeing an extreme move in the dollar, euro dollar, having, at least for the dollar's perspective, having its best day going back to July of last year. And of course, we have to pay attention to not just, of course, what's going on in oil. We had that huge pop that we saw in natural gas futures over in Europe, as well as actually a big pop in aluminum prices as well, also a commodity dependent on the Straits of Hormuz remaining open. We get the closing bells in New York, and after a big drop down, a 1% gap lower for the S&P 500, it looks like we're going to end the day in the green ever so slightly. We're just going to call it unchanged. It takes a while for these numbers to settle, but the S&P will be up roughly about 1 or 2 points on the day. The NASDAQ composite is going to add about 80 points, or about 0.4%. The Dow Jones Industrial Average, that's going to finish in the red, but only down about 0.1% or so. And the Russell 2000, Katie, you pointed this out earlier, outperforming, up about 23 points, or about 0.9%.
All right, so some outperformance there. As Romaine just mentioned, the S&P just a tad higher, call it pretty much unchanged here. Dig inside, though, the index, Katie, and by the way, good to have you back. 240 names to the upside, 261 to the downside, 2 unchanged.
I am thrilled to be back and tell you all about what the Circle is doing today. It's very interesting. You have about 4 sectors finishing in the green, 7 in the red, as you might expect. On a percent basis, energy, your big gainer on the day. As a sector, higher by about 2%, though. From a points basis, it was tech, that sector rallying about 0.9%. In terms of what didn't perform, consumer staples, a big slide there, down about 1.4%, really speaking to the idea that it wasn't too much of a risk-off move today. The fact that staples were your big loser on the day. Consumer discretionary, though, also falling by about 1%. So too did healthcare, Carol.
All right, so that's a look at some of the major industry groups. Let's go to some of the individual gainers, if I may, in terms of the S&P, not the S&P, the overall trade. Palantir, number 3 gainer in the S&P 500, number 2 gainer in the NASDAQ 100. As we know, a big government contractor, so riding that rally higher today because of Middle East tensions, also being upgraded to buy from neutral over at UBS. It's the latest firm to turn more positive on the software company in the wake of its results. Again, Palantir up about 5.8%. Along those lines, let's take a look at the defense sector, because we definitely did see a rally, really rallying, to be fair, over the past year as global tensions ratcheted higher. This new conflict in the Middle East giving traders another reason to invest in the sector. So we saw investors moving into Lockheed Martin up 2.8%. Also Northrop Grumman, a gain of 6%. And then you've also got RTX, the ticker there, that went up about 4.7%. Energy names also higher in today's session. We saw strong gains really around the world when it comes to energy names because of the Middle East tensions and, of course, continuing attacks from U.S. and Israel against Iran. So ExxonMobil up more than 1%. You had Chevron up about 1.5%, and APA Corp, that went up about 4.3%. And then I just want to mention one other name, because we had 3 names moving as a result of NVIDIA agreeing to invest $4 billion in 2 companies that develop data center optics that are essential for artificial intelligence systems. So NVIDIA, that was up about 3%. Those 2 companies, NVIDIA investing $2 billion apiece in Lumentum Holdings and Coherent Corp, multi-year deals. And so you had Lumentum up about almost 12% there, Tim, and then Coherent a gain of more than 15% in today's session. So, yeah, some outperformance there.
10 gainers?
I thought I did it rather quickly and efficiently.
You did, but I'm very impressed. I'm very impressed. I got 3 decliners for you guys. Well,
3.
We can call them all the airlines. How's that? Down 2.5% today. This is the composite airlines index for the S&P 1500. So everything was actually in the red today when it came to airlines in the United States, from Alaska, Southwest, Delta, SkyWest, United, to American, Sun Country, Allegiant, and JetBlue. You did have airlines take a hit today. This not just on tensions around the world, and some airlines, including United, cutting off certain routes through the Middle East, like JFK to Tel Aviv, and Delta doing that doing that, but also higher fuel prices and what this means for demand when it comes to actually people traveling around the world. Our Bloomberg intelligence team writing that a prolonged U.S.-Iran engagement will reduce U.S. airline first quarter profits, especially for the large international carriers such as Delta, United, and American. Airlines as a whole down 2.6%. Also, speaking of travel, Norwegian Cruise Line holding falling today. The company out and saying that full-year net yields will be little change due to execution missteps in its commercial and deployment strategy. The company forecast earnings that came in below the average analyst estimate. The company also facing pressure from activist investor Elliott Investment Management. It disclosed a stake of more than 10% and criticized management decision and spending. Cruise stocks as a whole fell today, not just over what happened with Norwegian, but also oil prices surging the most in 4 years as a result of those military strikes. And finally, in the S&P 500, the worst performer, AES Corporation, BlackRock, Global Infrastructure Partners, and EQT agreeing to buy AES for about $10.7 billion in cash. They're going to pay $15 per share for AES. That's below Friday's closing price because this news had come out last week, but shares today fell, Romaine, by close to 18%.
All right, I do want to just check in on yields, because when we talk about the big moves that we had in the cross-asset space and how most of those moves faded, the move in yields actually did stick. You're looking right now, you have a 30-year yield that on a points basis having the biggest one-day increase since January. On the 2-year, the biggest one-day gain since October. And on the 10-year, the biggest one-day gain going back to June. And a lot of that has to do less with the geopolitical aspect of it specifically, but of course the ripple effects, the idea of a potential inflationary effect here, and the idea, as some folks have already said publicly, that the Fed ain't going to do anything anytime soon, no matter what the outcome of this happens to be over the next couple of weeks.
Yeah, certainly. An already complicated picture for the Fed gets a little bit murkier here. Meanwhile, earnings season continues to roll on. Let's quickly talk about what we're seeing come out of MongoDB, reporting that fourth quarter adjusted EPS actually beat estimates, coming in at $1.65. The estimate had been for $1.48. Also beating when it comes to fourth quarter revenue, coming in just above $695 million. The estimate had been for $670 million. So, you know, another reminder that the world keeps spinning, and certainly the engine of corporate America continues here, Carol.
Yeah, and a name down that's already down about 22% here in 2026. Hey, let's go to kind of some of the bigger, broader themes. And I think about the conversation Lisa Abramowitz had with Jamie Dimon, CEO, of course, of JP Morgan Chase. And he talked about more optimism being out there in the market than there should be, given all the risks. He talked about kind of warning that there's a lot of complacency in the market, that inflation is one of the risks. He calls it the skunk at the party. And he thinks that the probabilities of something going south are more than other people think, and that inflation will cause the economic downturn. I feel like there is momentum. I think of Lloyd Blankfein, again, making a reference to the great financial crisis. Jamie Dimon has done that. There's a lot of people, and they're not quite sure, not necessarily pointing full-heartedly at private credit, but watching the credit space overall.
Yeah, one of those people, Danny Moses, joined our program in the 2 o'clock hour. You know him from The Big Short and Moses Ventures, Romaine, but he's been one to talk a little bit about concern when it comes to private credit, the opacity there, and if there is going to be a shoe to drop from private credit.
And we kind of forget, you know, too, in addition to the big conversation we've been having about private credit last week, we're also talking about the issues going on in the AI space with high valuations and the borrowing going on in there. You throw in geopolitics over it. But we've seen this before, right? right? I mean, anytime you do eventually get to that point where you do have that big crash or whatever you want to call it. It's never really slow. I mean, most people are going to continue buying, continue to try to make money as long as they can. And that's probably what you're seeing right now. It's not that people aren't aware of those cracks, but until they really feel that that day of reckoning is actually here, why would you pull back meaningfully?
Yeah, it's interesting. I mean, I feel like at any point in time, you can make the case that markets look a little bit complacent. We do have such an interesting confluence of factors at this time. What is a little bit different, it feels like, versus past episodes in the past couple of years is the fact that you are seeing a rush for havens, at least when it comes to what we're seeing in gold, for example. So it's not like people are buying risk and that's it. There still is that demand for some of those safer assets.
And speaking of volatility, the VIX hitting 25.